Today, AU Small Finance Bank, one of India's largest small finance banks, witnessed a significant dip in its shares, down by about 10%. Now, this marked its most substantial single-day drop since August 2021, and this downturn follows the release of the company's Q3 results. Let's discuss this. Now, a major aspect of the functioning of any bank is to earn interest on the loans and securities they offer and pay interest on the money that customers deposit. And the difference between the yields a bank earns on loans and the interest it pays on deposits is the net interest income. In Q3 of fiscal year 24, AU Small Finance Bank's net interest income increased by about 15% year over year to Rs 13,249 million. However, a closer look at the 7-quarter data does show us a consistent decline in net interest income growth rates. Now, the net interest margins dropped to 5.5% in Q3 of fiscal year 24 from 6.2% a year ago and is expected to be at the lower end of the management's guidance for fiscal year 24. The bank cited a challenging operating environment with higher interest rates and stiff competition for deposits. The bank's advances, which represents loans and credit extended to customers, grew by about 20% year over year to Rs 667 billion. Now, total deposit reached more than Rs 800 billion, showing a year over year growth of 31%. Now, despite these positives, the net profit declined by about 4.5% year over year to about 3.75 billion rupees, missing street estimates. Now, this was led by higher provisions, which was up by about 39% quarter over quarter, impacting the net profit. Now, it's important to note that provisions are funds set aside by banks to cover potential losses. Now, these provisions act as a safeguard against possible defaults on loans issued by the bank. So, the increase in provisions had a direct impact on the net profit for the bank. Now, asset quality of the bank declined, with gross non-performing assets rising to about 1.98% in Q3 of fiscal year 24. Net NPAs increased to 0.68% from 0.5% a year ago. Credit cost increased on the back of higher write-offs, as essentially in the credit cards business. The card business experienced a negative surprise as delinquencies, which are instances of late or missed payments by borrowers, spiked. Now, this increase resulted in higher credit costs for the company. Now, excluding credit cards, the net credit cost normalized at 0.44%. Now, in conclusion, AU Small Finance Bank reported a mixed bag of results. While deposit growth remained healthy, higher provisions and a decline in asset quality took a toll on its net earnings. Now, looking ahead, investors should monitor key factors such as net interest margins, overall operating performance, any signs of further asset quality decline, and the impact of the merger with Fincare Small Finance Bank Limited. Having said that, this is me, Merlin Sana, signing off. Take care and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment-related documents carefully. Visit www.researchandranking.com.